IPOs have become regular in the Indian capital markets over the last few years, and so has the investor participation. In fact, in the first half of the current calendar year, 35 companies from the main board segment have raised 32,000 crore rupees and were subscribed on an average 61 times. But a recent study by the markets regulator revealed an important trend. A new study by the Securities and Exchange Board of India revealed that over half of the investors in IPOs between April 2021 and December 2023 sold their shares within a week of the listing. The study also found that within a year of listing, this figure increased to 70% by value. SEBI noted a clear pattern in investor behavior, which is selling assets that have appreciated in value while retaining those that have depreciated. Their study, which analyzed investor actions in 144 main board public issues, revealed that flipping was widespread among individual investors. The markets regulator found that investor behavior was strongly influenced by returns. When IPO returns exceeded 20%, investors sold 67.6% of shares by value within a week. Conversely, only 23.3% of shares by value were sold when the returns were negative. The report mentioned, and I quote, individual investors sold 50% of the shares allotted to them by value within a week of listing, and 70% of shares by value within a year. The study found a strong disposition effect, with investors showing a greater propensity to sell IPO shares that posted positive listing gains compared to those that listed at a loss. The markets regulator also highlighted a special trend about demat accounts. It mentioned that the surge in interest for public issues is also driven by an increase in demat accounts established after the COVID-19 pandemic. Approximately half of the demat accounts that applied for IPOs between April 2021 and December 2023 were opened during the post-COVID era. The study also found that there was a sharp decline in IPO applications from big-ticket NII investors, with the average number of applications from NII investors applying for more than 1 crore rupees in IPOs, dropping 626 per IPO in the pre-policy period to around 20 per IPO in the post-policy period. SEBI survey highlights what market analysts and old-school investors have been saying for a long time. Majority of the retail investors have been investing in IPO boom to make short-term gains and not investing in the long-term belief of the IPO market and fundamental health of the newly listed companies. What do you make out of this survey? Will this denigrate your interest in the Indian IPO market? Please let us know in the comment section and stay tuned to LiveMint for more such updates.